Can trash-based products command the same market value as existing products? That's been a dilemma for Taiwanese entrepreneur, structural engineer, and architect Arthur Huang on a mission to create a circular economy. Today, as perceptions change about upcycled and recycled goods, a wide range of his offerings from tableware, home decor, tech gadgets to even construction materials enjoy price parity. While his business Mini Whiz has a growing presence with offices in Taiwan, Singapore, and Milan, Huang is a rarity in the line of circular businesses in having kept a Mini Whiz afloat for the past 2 decades, albeit after veering towards bankruptcy twice.
Was it inevitable that you nearly went bust twice?
Yes. How do you scale into the market? How do you get the right margin? It comes down to value.
Huang credits his multiple business lines, spanning from waste management, consumer manufacturing to construction and building material supplies, for sustaining Mini Whiz through the ups and downs. Others contend that most ESG sustainable businesses flop because they only focus on doing good while forgetting the very basics of running a business, which is to provide a better product and not forget about the aesthetics.
A lot of entrepreneurs who embark on this sustainability, ESG, or circularity movement don't survive within a couple of years. What can they do to emulate the level of success that you've had?
The philosophy, it can be replicated everywhere, but each location requires a different holistic approach. For example, how you run the business, how you commit to make progress in making things better. If the experience is not beautiful, the product is not beautiful, I wouldn't stay there just because you tell me it's sustainable.
The Indonesian entrepreneur has built a sprawling F&B and hospitality business in Bali, Singapore, and Bangkok with a zero-waste vision. By working with artists, designers, and architects to beautify his establishment in Bali, virtually everything gets recycled or reused, mostly within its premises for furnishings, products, and amenities. His Bali resort was certified by the United Nations as the first carbon-neutral hospitality company in Southeast Asia. Can businesses focused on ESG sustainability be more cost-effective and reduce carbon footprint?
There is certainly no direct correlation between the fact that if you do good, you will do well from a performance perspective. But then it comes back to the question of what good really means.
So you can do good and achieve financial returns at the same time. What you do need to ensure is that the business model is completely aligned with your impact objectives so as to avoid any idea of impact washing.
In a world awash with net zero targets and trillions of dollars heading into sustainable investments to finance ESG objectives, more innovative products and solutions are being unleashed, creating new or niche industries. But few businesses dedicated to a circular transition survive, let alone thrive. What is the missing link, and what are investors looking for?
Running any startup is a hard thing. We think as long as we replace a problem with a more sustainable solution, then the product is good. It should be the other way around. What is your proposition? Are you making a product that is exceptional, that is different? How do you do it better?
The number one mega trend for this decade. The first thing people want is a company that really has a product or service that will help to change the world. A company that can actually make money doing that. And that's the really hard part.
If winning market dominance comes down to profitability, how will global shocks affect ESG businesses in a period fossil fuel investments were simply too lucrative for investors to ignore? Without a rigorous universal ESG and sustainability framework, how should investors manage greenwashing amid confusion over standards and different benchmarks?
One of the key challenges is performance. Energy companies having performed very well. Sustainability just doesn't work that way. The world we're looking at a 20, 30-year horizon.
With the long-term horizon in mind, the momentum for ESG and sustainability is building around SDG, or Sustainable Development Goals, an urgent call for action by the United Nations to drive change at scale.
financing gap of about 3.7 trillion to fulfill our SDG goals. And that was a substantial increase from about the previous estimate was 2+ trillion before the pandemic. So you can view that as a large funding gap, or you can view that as an immense opportunity.
Just as the dot-com bubble and the internet have changed the world, so too will climate change as investors and financial markets adjust to the biggest challenge confronting humanity in the 21st century.
When you think about Asia, you have over 50% of the world's population living here. Over 3/4 of the youth are actually interested to be part of the green economy and want to direct their business through investment as well.
At the end, I feel like the consumer will choose a brand that is more responsible. You cannot just recycle, upcycle, where everyone is just buying something with a very bad quality and throw it away.
That digitalization allows a small company, about 100 people, to do all this crazy innovation without $1 billion of R&D costs. Because of that, then trash has a potential to become something else.
As technology and innovation help spur a wave of ESG and sustainability-focused businesses, while social and environmental pressures reshape economies, how should investors go about sustainable investing?
There's infinite opportunity. When there's too much competition, prices start falling, and only the most efficient can survive. In the 1930s, there were 44 car companies in the United States. Today, there's only the big four, and you have to approach it a little bit like venture capitalists, knowing that many won't survive. It's not the best product that wins. Ultimately, it's the one that's the most profitable.